Thank you, Vishal. Namaskar, greetings and good evening from Australia and good afternoon to India. It's great to be on board and kick off one of the first hybrid events this year on behalf of AIBC New South Wales, AIBC National Chapter for Financial Services, and our host and co-organizers, the Consulate General of India, Sydney office here. So good evening again to all of you. On behalf of all the hosts, I welcome you all and I want to kick it off. Before I kick it off, I would like to begin by acknowledging the traditional custodians of the land we are gathered here today, and I pay my respects to the elders past, present, and emerging. Now, we're all gathered here for the India 2021 budget post-budget briefing session. What a phenomenal budget this year we have had, and obviously post a year of COVID, and which continues to grapple India and the world. There was a lot of expectation on this budget, India 2021 budget, which was presented by the Honorable Finance Minister of India earlier this month. And obviously, there's been a lot, of analysis done and, review done. And the whole question about how progressive this is, that's something which we're all going to look into as part of this session. So today we have put together on behalf of AIBC, New South Wales, the Financial Services Chapter, and the CGI Sydney, a great deep dive into the budget, looking at what are the key highlights, but also what are the takeaways for Australia, an Australian market and Australian companies to look at collaborating as we shape towards a $1 trillion economy growth story for India over the next 3 to 5 years. What we'll also have is a very exciting panelists on board who will explore a bit more and delve deeper into various facets of this budget as well, and touch on those specific opportunities as well. On that note, I will invite our Consul General of India, Sydney, Honorable Mr. Manish Gupta, to address the gathering and welcome the audience here. Thank you.
Good evening, everyone. A very warm welcome to you to the Consulate on behalf of all of us, as well as the AIBC New South Wales chapter. In fact, this is one of the few hybrid events that we have hosted in the Consulate during the last 5 to 6 weeks. This post-budget briefing, I think, is very, very timely, and also a time to recap the developments that have happened in our economic and trade space between India and Australia during the last 1 year. Last year, friends, as you know, has been very, very challenging. It goes without saying for us here in Australia and in other parts of the world. But one thing, we are pretty hopeful for this year. The vaccination programs have started in different parts of the world, and we are pretty optimistic that Australia will also be open for international travel as we move towards the end of the year. This brings us hope, a new optimism, where we can work, we can collaborate, we can travel, we can share things together on a much larger scale. As I said, last year was challenging, but it was really big when it came to India and Australia political and economic space. Our engagement continued in the virtual world. Our prime ministers have the virtual summit. This partnership was elevated to the level of a comprehensive strategic partnership. We worked together in Quad. We worked together for the global supply chains. And our prime ministers and foreign ministers also met a couple of times in the virtual and the physical world during the last 1 year. When it comes to economic reforms in India, last year, the government has undertaken some important reforms. To say the least, I should term them as the path-breaking reforms. The pandemic hit us hard, but that doesn't mean that we thought that we should only focus on the pandemic. the government really did a great groundwork, especially in the field of reforms when it comes to agricultural reforms, labor. The new education policy was unveiled and consolidated on the great work that the government has done during the last 5 years. As they say, the proof of pudding is in the eating. So I don't want to go much into the details, but I would like to just focus on a very few statistics, Last year was difficult for the global FDI, but India and China were the two countries that were the outliers. India attracted nearly $60 billion of foreign direct investments during 2020. As I always said, India and Australia, we are two societies, which always believe in knowledge and innovation. And the startup space is something is always very close to our hearts. I'm happy to share, last year alone, there were 11 unicorns created within India. So far, Indians have created 60 unicorns. And there is a very conservative estimate, by 2025, you will be looking at 150 Indian unicorns. But that speaks about, the vibrancy and dynamism of the Indian economy, as well as the risk-taking attitude of the Indian youth and the young budding entrepreneurs. We have a distinguished panelist of guests today to discuss the post-budget briefing. So I won't go into the details, but I would certainly like to say this budget is big on economic reforms. It's bold, it's focused on deregulation, it's focused on privatization, as well as asset monetization. There's a huge emphasis on the CapEx expenditure, which has been increased by 35%, which is quite extraordinarily large amounts by Indian standards. So I look forward to a very exciting and fruitful discussion today. And I'm quite confident and upbeat that this year will be even better for India-Australia ties. Thank you.
All right. Thank you, Consular General Sydney. Thank you, Dinesh Gupta ji. It was quite insightful, and you kind of reflected and summarized what was the expectation from this budget and what has been delivered. So on that note, let me invite Mr. Pranay Kumar, the CEO of State Bank of India, Australia, and who's also the national chair for the national chapter for financial services at AIBC, for him to set the India budget 2021, to set the context for this session. Please, if you can come through.
Good evening, everyone. Budget is, we manage every day for our own pocket. This is all very, very simple. But let me say a small line about the budget. Like every year, this year again the budget was presented. But this time the budget had the 3 R. The one was the repair, and another was restore, and third one was to rebuild. As usual, because of pandemic, the several devastating things had happened. The government, by this budget, they informed to the people that what are the measures they have adopted to repair, and also what are the measures they have adopted to restore the confidence. And then finally, with the number, they wanted to rebuild the India growth story. So another surprising element, because all of us, all individual as corporate or MSME, everyone were expecting, because of certain devastating role, because of pandemic, so much of stoppage, haltage, everyone were expecting that there will be some amount of cess, there will be some amount of wealth tax, there will be some amount of surcharge, or the government will do some provision so that the money will come out from our own individual pocket to the government corpus. Luckily, there was no such tax or no such wealth tax were provided by the government, and that was a good news for every one of us. Going forward, we will discuss about all the parameters of the budget. I'm not going to discuss all the numbers. Numbers are there. I'm just trying to say that how this budget is look like. One of the key elements of the budget was health. Second was the infrastructure, and then innovation, human capital. There are several things for there. Health was, of course, it draws many more investment, many more expenses. But one number which I wanted to highlight, that expenditure was, government announced that 35,000 crore towards COVID vaccine, right? I have done one mathematical calculation, assuming that the Indian doses cost 200 rupees, for 200 rupees for 30,000 crore, definitely it become to 175 crore of doses, which means that every one of us will get 1.25 doses. So, to that extent, the government has planned that every population will have 1.25 doses, and the government has also said that if the money will shortfall, then further more money will get issued. So government has indicated that health is not only the priority for the future, for the current also, that everyone will get vaccinated. I believe that this is one of the best indication in entire the world the government has given. They've allocated the money and they've said that the commitment that money will be given further. So rest assured that everyone will get doses. There is no confusion. Government has so much of money in their corpus. Going forward, definitely we will discuss about all those numbers, all those parameters. One of the tasks which I have, one of the tasks what I have carried out, and I wanted to give the message to everyone who are in Australia. From Australian point of view, why this budget is so fruitful, so meaningful. So I would like to draw one or two or three comparison, or two or three items which definitely will draw one of the attention. Government of India has, in the last couple of years and this year also, they were saying that why not the sovereign wealth fund or pension fund is coming to India. The Australia is one of the big market, and the Canada is also one of the big market. The government has made a beautiful provision in this budget. There they said that if the sovereign wealth fund or pension fund are coming to India, the last year what they said, that if you're coming to India, you will not be able to pay capital gain tax or dividend distribution tax or any other type of tax if you are investing in India, any pension fund is coming to India. But provided there was one caveat, you have to invest in infrastructure fund. Your investment should be in infrastructure fund. If you're investing in infrastructure fund, then you don't have to pay the taxes. But again, none of the fund in India, or most of the fund in India, are not 100% infrastructure related. The government has made a very beautiful provision this year that your tax will get exempted even if you invest in a fund which is only 50% infrastructure related. So if you are investing in a company who are having the 50% investment in infrastructure, then also your all tax will get exempted. This is point number one. Point number two also says that if you are having an holding, if you're investing through a holding company, that also is permitted. Third one, they said if you are investing it in NBFCs, who are they, and NBFCs are in infrastructure, then also you will get exempted. So not only your direct investment, your indirect investment also will be tax exempted. So from the Australian point of view, if we are marketing to the pension fund, then India is again a good growth story. We can do that. Next one, I believe that AIBC has a great role to play, and KPMG and Grant Thornton, you have a great role to play. I'll tell you what. Government has announced that they will do the 7 mega textile infra park. Government, and this 7 mega infrastructure textile park will come over a period of 3 years. Now, you know that during the pandemic, everyone has suffered the supply chain challenge. Supply chain challenge, mostly related to the garments, home furnishing, and blah blah blah. So many things. Garment, you can say that is get changes with every 2 years or 3 years, their style and all. But home furnishing and other, there are several like hotel, hospital, linen, everything are there, which are more or less they're static. So right now, this is a great time for the organization like AIBC or Grant Thornton or KPMG, whoever it is, and they should engage with the Australian government or Australian company or Australian organization to ensure their supplies are secure. So this is the time when we should engage, or Australian company or Australian corporate, they can engage with India before this manufacturing come to a certain level, you can do your supply at this stage even. So going forward, definitely government will attract more and more investment, and government and whosoever will invest, they will look for the market. If you're looking for a market, and if you want a secure supply, is the best time you can partner with someone, and you can get your government and non-home furnishing get supplied done. Number two. Number three, government has also said that one concept called OPC is a one person company. So if you are an NRI, or if you are residing in different country, you get very difficult to find a good employee, good CEO over there back in India. So government said that a single man company, you can set up a company back in India and you can run your business. And the government also said that one company, there is no restriction for number of years. You can convert your company into the public company, private company, partnership company, after as and when you wish for it. So OPC and their provision are is very, very attractive for the people who want to invest to India, and they don't have capacity or bandwidth to hire right people or good people over there. You don't have to go for a director or somebody else. Simply you can hire an employee and you can run for your business. So this is, I believe, that from the Australian point of view or any foreign national point of view, is a very good initiative. Also, the government also said that double taxation treaty will be honored. So if you have if people have faced lots of hardship over there, so government has said that that double treaty taxation will be honored. And there are other if you are in a startup, if you are going over there, if any Australian want to go there, so the government has also said that if you are under the digital mode, then if you are doing 95% transaction through the online or through the digital, you need not have to go for the audit exercise. So I believe that the government has done an expansion plan. The government has also said that during this year their borrowing will be 12 lakh crore. I think if you are a good deep pocket over there, you can participate in government fiscal plan. I think that the tone is that hope and growth. So these two tone, and at the beginning what I said that this budget was to repair, restore, and the rebuild. So entire discussion or entire paper whatsoever we are going to present today during the panel discussion, and also to the when we have the live streaming, this will be covered under this total under this thought, and I believe that we will enjoy the session going forward. Irfan? Yeah, thank you. Thanks.
Thank you, Pranayji. Thank you for sharing those high-level highlights of the budget, and we look forward to again having you on board for the panel discussion as we delve a bit more deeper into these key highlights as well. And thank you for setting the scene and the context of this session. Thank you again. On that note, let me invite our budget expert all the way streaming from Mumbai, Mr. Amit Fulwani, who's the KPMG India partner for tax and regulatory services. And he's been about 15 years associated in the industry with KPMG, and an expert who's been also briefing other countries as well post this budget. On that note, let me invite Amit. Welcome on board for this session on behalf of AIBC and CGI Sydney. Over to you to take it forward. Thank you, and give us more details of the budget highlights.
Sure. Thank you so much, Irfan. Hello, everyone. Greetings from Mumbai, India. Would have been great to be there in person, but I guess with all the COVID and the restrictions, this is the best we can do. But yes, thanks to the technology, we are able to attend this virtually and contribute. A bit of background about me. I've been with KPMG India for about 15 years now, focusing on taxation. And we advise both local as well as foreign companies investing into India. And I focus on Australia as a corridor. Coming to the budget announcement. So over the next 20 minutes or so, we will be touching upon some of the important budget proposals. The thing to note is these are proposals. These are not yet codified. In the next 5 to 6 weeks, once the document goes to the parliament, then it becomes a law. So it should be codified in the next 6 weeks, subject to changes, if any. With that, we can go to the slides. Vishal, if you can flash the slides. Yeah, next slide. Yeah. So before we go to the budget announcements, we can just spend a couple of minutes as to what was the run-up or the backdrop to the whole budget. If we look at the year 2020, so of course you had the COVID coming in February, March 2020. So in the first quarter 2020, April to June, there was a hard lockdown in India, probably the biggest lockdown in the world. And as one would expect, the whole economic activity, the consumption just crashed. So there was a significant slowdown in the economic activity. But come July, August, the numbers uh, kind of came down. And also with the unlocking happening in the gradual phase, the economic activity opened up quite well, much better than what the experts had forecasted, so much so that we are looking at a V-shaped recovery. So whether we are looking at consumer goods consumption or whether we look at real estate purchases, the numbers are just very encouraging. In fact, the kind of forecast is that for the year FY21, the slowdown would only be 8%, much better than what was originally feared. And if you look at FY22, which is March 22, the forecast is India should see 11% GDP growth. So as I said, numbers are looking much better than what one would have expected, let's say 6 months earlier. The next piece is this whole focus on manufacturing. So this is something not which has come in the budget, but this has been a focus area for the government last 12 to 18 months. So we have something called as product linked incentives. So the whole idea is to kind of make India a prominent player in the global supply chains. Countries and companies which are dependent on just one country for production, they should seriously consider India. That is the whole objective. And so that they diversify the risk on depending on one country. So what the government is trying to do here, so in 2020, they started with the electronic goods sector. The response was very good. So we already have contract manufacturers which are manufacturing Apple iPhones. 3 of them have already kind of got the approval to manufacture phones in India. But that's just the start. Electronics is just one sector. There are 12 other sectors ranging from automobile, food, textiles, medical devices, pharma, and so on. And this is really one of the key themes and push areas for the government to make manufacturing in India on the global scale and make Indian companies more competitive. We heard earlier about the deal activity in India. In spite of COVID, we had very good foreign direct investment flows, especially in the technology sector because of this whole work from home and learning from home concept. So companies which are in the digital space and companies which are in education tech space, they benefited. And we have seen infusion and FDI of over $40 billion in select companies. Geo platforms being the most prominent one, wherein we had a whole host of marquee investors, sovereign funds, Google, Facebook investing in a fundraise which went on for 2 to 3 months. Even in the listed space, the activity has been quite good. This whole flow of capital to emerging markets has resulted in over USD 30 billion being pumped into Indian listed companies. Moving ahead, the focus clearly was government wants to give more push to the economic activity, and what better way than to do increased spending, especially on the infra sector. So that was the expectation in the run up to the budget, and we'll talk more about it as we go ahead. So this was within the constraints of fiscal deficit because the expectation is that for the year 2021, we may end up having a fiscal deficit of 8 to 9%. But I think the government clearly indicated that they would not be too scared of fiscal deficit. The focus is on growth, and they are happy for fiscal deficit to be in the 8 to 9% range for a couple of years, with the idea being to bring it down to 6 to 5% in the next 24 to 36 months. So infra and healthcare was set to get the government push in the budget. Next slide, please. So now coming to the budget announcements, and these are proposals. So first we will talk about some of the prominent proposals in the financial services space. The big one, of course, is this whole proposal relating to insurance companies and the foreign direct investment in that. Currently, foreign ownership in an Indian company is restricted to 49%. Now, the proposal here is to increase it to 74%. And more importantly, what is now allowed that even the control can be with the foreign company, which was earlier not the case with 49%. So this is a very significant development. We expect a fair amount of action to happen in this space. There are some checks and safeguards which the government has put in terms of that at the Indian company level, the directors should be independent, 50% directors should be independent, and there should be local representation. But still, it's a fairly significant announcement, and it will give enough elbow room to foreign companies who are waiting for this relaxation to happen. Moving on, the next piece relates to this whole proposal to address the bad asset situation in India. So as we are aware, there are a lot of bad assets in India, especially in the PSU space. The idea was to set up a bad bank, but I think the government realized that instead of setting up a bad bank, maybe they can make use of an asset reconstruction company framework, wherein all the bad assets will be pooled in a trust structure, and then they will invite money from foreign institutional investors and also local players, so that they don't have to infuse all the money. So again, this is something which will give significant opportunities to Australian investors to participate in the Indian story. Another piece relates to whole monetization and disinvestment of public sector undertakings. There is a IPO of life insurance company on the annual, which is going to be the mother of all IPOs in India. With a 7 to 8% dilution, the government is looking at a fundraise of about 15 billion. So that's a big one which can happen in this year. Then there's a proposal to privatize a couple of public sector banks and also reinsurance companies. So again, just shows that the government is pretty keen to limit the number of players and also allow foreign players to participate in this. The other big proposal relates to the bond market. Bond market, for different reasons, has not really picked up in India in the last many years. The proposal here is to bring in a framework which will allow certain specified government securities wherein foreign investors can invest, so that there is more participation. Also, there's a proposal to come out with more bond ETFs, which again foreign players can participate into the investments through the exchanges and through the foreign portfolio investment route. Yeah, so this was some of the changes in the proposals in the financial services space. If you can move on to the next slide, please. Yeah, moving on to the big piece which relates to infrastructure. So as we heard earlier, infrastructure along with manufacturing is one of the key themes in this budget, with this whole focus on capital and government spending, because once you spend on infra, then the ancillary industries and sectors like cement, steel, everyone stands to benefit. So what we will see in this slide is a mix of announcements on the tax and regulatory side, with the whole idea to give a fillip to the entire sector. Now, the government has already announced a national infrastructure pipeline in 2019, which is a very ambitious project spanning across 5 years, wherein government would infuse around 70 billion US dollars on roads across India. While the government is ready to infuse money, but clearly there's a realization that government on its own will not be able to infuse the entire money, and hence it is very important that we have suitable frameworks which will allow foreign players to participate in this and contribute capital. So towards that, there's a proposal to set up a whole development financial institution which will mobilize funds for long-term financing. Government intends to infuse around $3 billion, and the idea is to raise around $50 to $60 billion from local and foreign investors in the next 5 years, which will ultimately be channelized towards infra investments across India. So as I said, ambitious plans for capital outlays for roads, highway infrastructure, more airports on the anvil. Uh, Also, there's a realization that I mean, the government wants to put in more money, but at the same time, they have to monetize their operating assets. Whether we are talking of toll roads, whether we are talking of power transmission assets. So the idea is to use new and innovative routes like investment trusts, which have become very popular in the public and private space in the last 2 years in India, wherein what happens, you pool your investments in a trust, and that the trust raises money from domestic and foreign investors. Uh, so that's a very kind of optimal fundraising framework which has been used in India. So the idea is to monetize some of the government assets through these routes as well. We heard in the earlier section about the proposals related to sovereign funds and pension funds relating to infra. So again, something which needs to be kind of evaluated very closely by sovereign and pension funds who want to participate in the growth story in India in the infra space, because here you enjoy complete tax exemption on interest, on dividend, on capital gains. So some of the conditions we heard earlier. Also, there are other points like not only investment in the underlying SPV, even if you are investing in a holdco, that also would be allowed. Earlier, there were restrictions that you should not be having directors and all. That also has been removed. So, fair bit of rationalization on this particular account. Also, on the tax front, there was a cash trap which was happening at the real estate investment trust level, because what was happening when the Indian company was paying dividends uh, to this real estate and investment trust, there was withholding of taxes happening. And then when the trust was in turn distributing dividends, again, there was a withholding of taxes. So the withholding was happening twice, which was a tax leakage, and representations were made. So through this budget, the proposal is that there will be no withholding tax on dividends when the underlying SPVs pay dividend to the investment trust. Moving on to the next item. So developers who are engaged in constructing housing projects, they enjoy tax benefits. There is a sunset clause provided, and so you needed to get the approval for a particular project by March 21. So that has been extended by 1 year to March 22, which will allow more developers to come out with new projects in this space. There is also a proposal to allow real estate and investment trusts to issue debt instruments to foreign investors, because again, while currently they can subscribe to units, there was a representation that we should allow more equity players or more instruments to be allowed for these trusts, so that foreign investors who have kind of preference to different instruments can also participate. Yeah, so this was on the infra space. If we can move ahead. This is on the taxation, while what is given in the screen is a snapshot of the applicable tax rates. As such, through this budget, there is absolutely no change on the tax rates. The corporate tax regime remains the same in terms of the applicable rates. What I would just like to highlight, let's say you are a company which wants to set up a manufacturing base in India, then India provides for a very kind of attractive 15% base tax rate, okay, for such a company. So if you want to set up a manufacturing company in India, the applicable rate would be 15%. If you talk of other sectors, the tax rate would depend on whether you are claiming deductions, incentives. But if you are ready not to claim any incentives or deduction, then the applicable base rate would be 22%. And also, if you're having turnover of less than INR 4 billion, then irrespective of whether you are claiming benefits or no, the base rate would be capped to 25%. So these are the different categories of tax rates. So India kind of relaxed or reduced the tax rates 2 years back to make India more competitive vis-a-vis some of the other countries in the Asia Pacific region. And we have seen a lot of interest post these changes, along with the product linked incentive scheme, which I earlier spoke about. So the very competitive tax rate of 15% and the cash-linked incentive which players would enjoy post getting the approval in the product-linked incentive scheme, we have seen a lot of interest in this in the manufacturing space in India. Yeah. Yeah, foreign companies, no change in the tax rates, and also limited liability partnerships would continue to be taxed at the same rate. Yeah, if we can move ahead. Yeah, continuing on with some of the other tax proposals. So this relates to foreign portfolio investors. We have several foreign portfolio investors from Australia who are investing into listed securities, shares, debentures, and so on. So dividends which were paid by Indian companies to such foreign portfolio investors are subject to withholding taxes. So let's say under the Domestic Act, the withholding rate is 20%. India-Australia Treaty provides for a beneficial rate. But as per the provisions of last year, the Indian company could not take recourse to the treaty provisions. And hence there was a cash trap which was happening. But thankfully, through this budget change, now the Indian company will also be allowed to take the treaty provisions of India-Australia Treaty, and the withholding can happen at a lower rate. So this is a very important announcement for several foreign portfolio investors which invest into Indian securities. Of course, they will have to give underlying documents around tax, residency certificate, and other declarations. But again, something which is very welcome. The other piece relates to what in India we call as an equalization levy, which in simple terms is nothing but a digital tax. The definition and scope of that has been expanded. This is meant to cover digital companies who are having significant user base in India. So they are required to pay 2% of their income as equalization levy in India. There is a fair amount of ambiguity considering the scope and the language there, and there are representations made to give some clarifications. But yeah, but this we have seen this is more relevant for companies from US and all. Companies coming from Australia may have limited applicability, but something they'll have to duly evaluate considering this specific fact pattern. Then coming to startups, so we have a framework in India which allows startup to benefit from on the taxation. So if you are a qualifying startup and if you are approved by the relevant authority, then you enjoy a tax holiday for 3 years on your income. So you don't pay any taxes. There was a sunset clause provided, which meant that only startups which get incorporated up to March 21 will qualify. Thankfully, that has now been extended by 1 more year. So even if a startup gets incorporated up to March 22, so long as it is qualifying and meeting the eligibility norms, they will qualify for the tax exemption for 3 years out of the first 10 years on their profits. So that's on the startups. Along with that, there are some other kind of changes, proposals for company side, which will kind of reduce the compliances for some of the smaller companies, especially startups. So that's again welcome. The compliance piece stands to go down because of these proposals. On the overall tax administration, there's a continued focus on digital and faceless framework. So, I mean, this is something which has been going on for the last 2 years, and this is a kind of marked change. So for me as a tax professional, let's say I used to go every day to the tax office 2 years down the line, but that has completely gone away. All our hearings, even before COVID, are through digital means. You make your submissions online, and then sometimes they allow you video conferencing discussions and all. So completely moving to a faceless and digital framework to address this whole issue of corruption and bringing in more transparency and consistency across the tax orders. Other than that, the timelines for tax audits are also getting further curtailed. So what happens, we follow financial year April to March. Typically, you have a time lag of 2 to 3 years before the tax audits gets completed. The idea is to reduce this time lag and finish the tax audits as close as possible to the financial year so that it helps the taxpayers as well as the tax administration in closing the matters. There's an important change which has been announced relating to tax depreciation on goodwill, which is an intangible asset. So this is especially relevant in the deal space. Let's say if company A is buying company B, then typically what happens in some cases, a portion of the consideration is attributable to goodwill. What the government is saying, the idea was not to allow depreciation on such an intangible asset. Especially self-generated goodwill may not qualify for depreciation. But again, representations are being made on this, that at least on acquired goodwill, something where I have paid consideration, at least that should continue to qualify for depreciation. So remains to be seen what is the final shape and form once we get the final law, once it is passed by the parliament. So that's on the tax amendments. If you can move ahead. Yeah, so this piece relates to what we call as the International Finance Service Center, which is a special economic zone in near Ahmedabad. This is a pet project of the Prime Minister's office. This as a concept was brought in 7-8 years back, wherein what they are saying that for all practical purposes, this particular IFSC or special economic zone will be treated as a foreign zone. It will not be treated as Indian territory. It will be treated as foreign zone. All the dealings here would happen in foreign currency. Okay. The objective is they want India to compete better against Singapore, against Hong Kong, make India as a financial hub, allow fund management to be done from India, make Indian banks more competitive. They can do dollar lending from this particular special economic zone. There's also a proposal that if you are let's say I'm a bank in Australia wanting to set up a captive center in India, or an insurance company in Australia wanting to set up a captive center in this particular economic zone, so long as the services is provided to the offshore entity, you will enjoy complete tax exemption. So no taxation whatsoever for a period of 10 years. So that's the whole idea, making this particular zone as a hub in the financial services space. We expect the landscape to change significantly in the coming 2 to 3 years. So we had the unified authority, which was brought in last year, and we have seen action, much more action in the last 12 to 18 months. In terms of the specific changes in the budget, as I said, there's a plan or a regime which encourages foreign funds to move from offshore to India. Let's say you have a fund sitting in Singapore. Then the idea is, how do I encourage the Singapore fund to move to India? So the regime provides for a complete tax immunity, no taxation at the fund level, no taxation at the fund manager level, no taxation at the investor level. So that's the proposal to encourage relocation of offshore funds into India. Similarly, in the aircraft leasing space, currently a lot of leasing is happening through offshore countries. The proposal is to make this special economic zone very attractive and provide complete tax exemption for companies who may be interested to do leasing in India by setting up a base in this particular special economic zone. Similarly, if you're a bank coming from Australia, and if you were to set up a offshore banking unit in this particular special economic zone, then you stand to enjoy a lower taxation if you are investing in listed securities. So your dividend and interest income would be at 10%, and also lower taxation on the capital gains. So these were some of the proposals on the International Finance Service Center. Yeah, if we can move ahead. Yeah, so that's about it. So the idea is focus on manufacturing, focus on laying down the red carpet for foreign investors. So with that, I conclude my session. I hand it back to Irfan. Irfan, you're on mute.
Thank you, Amit, for sharing those highlights, as well as going deep dive into certain aspects which is relevant for the Australian market, as well as for investors globally as well, looking at India. On that note, we will move into the panel discussion. We've got an esteemed set of panelists, industry experts here, and I'll invite Pranay back onto the stage. And Dharav, please do, and Andrew as well. So just to give you a bit of introduction. Just to give you a bit of an introduction, we've got Pranay Kumar, who's the CEO of SBI Australia, but also he's the national chair for the AIBC National Chapter for Financial Services. We've got Dharav Gandhi, who's a senior manager, private advisory, Grant Thornton, Australia. He's got enormous experience in the financial services sector, been Deloitte in India, but also at Grant Thornton here in Australia. And I'll probably give more details as we go into the panel. And I've got Andrew Davis, who's the ambassador at Stone & Chalk, which is one of the leading fintech accelerator, which involves various financial services organizations, top banks and top consulting firms out of Australia. And they also consult companies to go global and scale as well. He's a former head of innovation at HSBC as well. So on that note, I will open the panel, just going around the floor dice here. On a high level, how was this budget? Was it progressive, exciting? What's the tone of the budget? Let me have an opening note that way.
Thanks, Irfan. To me, the budget was quite progressive, especially in light of the COVID situation back in India and around the globe. This budget has been quite progressive. I just want to add 1 hour to Pranay's 3 hours. Resilience. This budget shows resilience, and this budget has power to lift India from negative GDP growth to a much higher GDP growth going forward. So yeah.
Thank you, Dharav. Quick note: progressive overall.
Yes, definitely it is a progressive, it is expansive. When I say the expansive, I would like to quote 2 data. One data is that this year the fiscal deficit was 9.5%, next year is 6.8%, and going forward it will be 4.5%. As per the FRNB policy, that the government earlier said that they will be toning down the fiscal deficit less than 3%. The government has shown courage to the world and courage to the rating agency that I am not caring about FRNB policy, or I am not caring about my rating numbers. I am caring about my expansion. I am caring about the growth of the country. And therefore, if the fiscal deficit is 9.5%, let it be. But definitely, I want to infuse money into the market so that market restore or rebuild from where it was the pre-COVID or the earlier the challenge which was the government was directing. So the 2 points: one is that which is progressive and quite hopeful for the growth. And as you know that the World Agency has indicated that our growth will be 11% and probably one of the highest growth in the world, where the double-digit growth will be there. And I can see that the initial numbers are coming to that level, because in the month of December and January, there was the highest collection of the GST numbers. So these numbers show that we are recovering not only the faster, but more than the expectation.
I think that's a good segue to an external view. Sitting in Australia, obviously, you have a startup lens. What is your high-level, overview of the budget? What are the key takeaways that you see?
Yeah, thanks for that. And whenever I look at a government budget, of course, I tend to try and identify initiatives that support MSMEs, entrepreneurs, startups, tech companies. So the great thing is, because all of those organizations, of course, underpin economic growth, help to achieve digitization of whole economies. And so I definitely found lots of good pointers in the budget about support of those sectors. So that, to me, was a very positive sign, definitely.
Thank you, Andrew. On that note, I'll probably just delve a bit more deeper, and this is probably meant for you, Pranay. I think there's a lot of shake-up that's happened in the banking sector, and really focus on banks that perform. Obviously, that's something which is global thing, but yeah, definitely India has taken that initiative. So the whole recapitulation of banks and privatization of banks has also drawn attention to the market. What is the message that government is clearly giving this time around?
Yes, the bank, in Australia also, the bank plays a very critical role for the growth of the economy, and as well as it set the tone of the economic wave and for the entire population. So banking is very critical aspect for any country, not only in India, every part of the world. You require a good amount of strong bank. You can see that the China has all the bank of the China or any other Chinese bank, they are all the banks top in the world, and they are American banks and so on. Unfortunately, the Indian bank, which were after nationalization, there is so many responsibility has been given to the Indian bank. And apart from the commercial lending, we were doing the social lending as well and mass lending as well. What happened in last 1 decade or so, the banking could not able to demonstrate the performance which was desired, and largely because of we are holding lots of NPA, we are holding the lots of the non-productive work we are doing. And out of that, what has happened that all the banks are, they're weak in their capital, their outlay or to the market is very, very, very low. The government has taken in last 2017, itself the government has taken a very bold step, and I think that until now the government has infused more than 2 lakh crores in the bank. This year again, the government said that I'm going to infuse 20,000 crores for recapitalization of the bank. According to me, the 20,000 crores is not good enough. The government should have given more, and hopefully the privatization and all will bring in much more money into the banking space, and therefore the bank will have the capacity to lend more. Here again, I like to say the 2 points. One is that when the bank requires capital, the capital also requires for the 2 purposes. One purpose is for the regulatory purpose, and another one is for the growth purpose. So I believe that 20,000 crores will come to the public sector bank. Government has not yet announced that which bank will go and how much, because it is a budget proposal. Whenever it will become an act, then the government will come out with more details about that one. But the government also says that about privatization of the bank. The message is slightly different than earlier one. Earlier, the government used to say that I want to divest my stake in the bank. So this time they said, no, we are not going to divest, we are going to privatize. So the difference between divestment and then the privatization is, divestment means the government still wanted to have control. But the privatization means the government says, no, I don't want the control also, and I want to give to the market. Please go and have a control and start working on the banking platform. The message is two. One is that government want to say that some of the banks, please go to the market, and I want to leave with the control. Second thing that government is also saying that the remaining bank, don't worry, I'm going to support you and going to give you the capital so that you can be partner in the growth of the country.
Thank you for clarifying that, Pranay. Just one of the terms which is very often heard when we talk about India's new India and focusing on driving this economy towards $5 trillion economy is the whole Atmanirbhar Bharat. And I've also received a question from the audience online as well. So first of all, before we touch on the audience question, I just want to focus on this whole Atmanirbhar Bharat budget that this has delivered. What are those of the 6 pillars that key things that Amit even touched as well? What are the top 3 pillars that you see that's relevant for Australians, market and Australian companies as well, which makes sense for us to really actively take interest on?
Yeah, good. So obviously the budget itself is based on 6 pillars, and out of 6 pillars, 3 pillars that comes to my mind. The first one is health and well-being. There is significant increase in expenditure in health and well-being industry. I feel that Australia has been focusing on preventative care and finding out diseases well in advance. So this is where I think the Australian company can tap into Indian market, and likewise, they can promote medical tourism as well. Having people from Australia travel to India to get their hip replacement surgery or any of the surgeries done. So that's the first one. The second one, innovation and R&D. So again, the budget focuses on monetizing space technology. As probably everyone is aware, India is well advanced in space research and technology advances. Australia can tap into India's capability of launching satellites and using the space technology for for weather-related technology or any other technology that they need. So that's the second one. And third one is about re-involving health capital. So there is focus on spending huge amount of money in updating the education system of India and upskilling the labor force in India. So this helps Australian companies to tap into the skilled labor force in doing whatever technology development or AI related stuff that they are planning to do over here. So these three sectors to me are quite critical in Australian context. The first one is human capital. The second one is innovation and R&D, which specifically relates to space and other obviously innovation things and healthcare.
Thank you, Dharam. If we may have, sorry, Pranay, if you want to add to us.
I have to add something. You all are staying in Australia. So do you know that who is the health sector regulator in Australia? Who regulates the health sector?
Is that not the TGA part? No.
I'll tell you that. Why I'm talking about health sector regulator, because the government in India during the budget, they also said that they also want to set up, because in India you have lots of private hospitals and there is no single regulator who regulates the private hospital. The government has taken this point very seriously, and they want to develop one regulator who will regulate the private hospital back in India. So, and I believe that there is again here is a joint where the Australian regulator, Australia also has a regulator. The two regulators are there, and the one is the Australian Commission on Safety and Quality in Healthcare. Second was the National Health Performance Authority. Second one, National Health Performance Authority, very good one. And I was quite surprised to know that this authority, they monitor on 48 parameters of the different indicators of the health performance undertaken by all the hospitals. So I believe that there is a knowledge over here, and if we can transfer this knowledge back to the government, it will be very, very good. So Australia is one of the top-notch where the health regulators are working very, very, very smarter way, and India is also want to acquire that knowledge. Second one, that just one more comparison, that Australia spends almost 7% of their GDP towards the health, and India spends only 1.5%. So there is gap is literally huge, and this budget has given a message that India also want to come to that scale. Of course, Japan is number one, which almost spend 9.5% towards the GDP towards the health. So there is a lot of opportunity between India and Australia, where Australia can step up and go to the government and they can say that, okay, that knowledge I have, please take it from me.
Well, I've still having got there. Obviously, when you look at the budget top notch, the key highlights, infrastructure is a huge spend, and obviously infrastructure growth and that spend is going to drive, the future of the new India. Do you want to reflect on the infrastructure budget and what it means for Australian, the super funds and other large Australian infrastructure companies as well? What is the opportunity presented?
See, again, infrastructure, again, I think KPMG also presented about DFI, Development Financing Institutions. India has earlier the DFI. It's not that earlier was not there, but of late the DFI that tested and it has not come to an expected level. This time again, government is coming with a new energy. They are saying that forget about that. I'm going to give you 20,000 crore upfront. And they have given a mandate as per the budget proposal, the 5 lakh crores you have to spend, you have to lend to the market in the next 3 years. Again, as a banker, my calculation is slightly different. When the government said that you have to lend 5 lakh crore to the in the market, which means that it requires two things. Suppose the lender is saying that I will give you $100 loan to you, which means that you also have to bring in some capital on the table. So if the government is saying that I will give you 5 lakh crores to the society, then society has to bring minimum 2 lakh crores. There is a gap. Now, next one, in order to outlay 5 lakh crores, you require a good amount of project. The government has, or company or people have to come out with a big ticket, big size project, because if 5 lakh crores, which you have to consume also. So the two things, one is that equity also has to be get planned, and second thing is that a good amount of big size, big ticket project also has to come on the table.
Thank you for that. I'll probably invite Amit as well on the line. If Vishal, we can have him on the focus to chip in on this infrastructure spend and what the scale has been that this budget is shown.
Yeah, sure, Irfan. So as I said, on infrastructure, the budget said, as for the budget, it would go up by 35% vis-a-vis last year. But if you look at the bigger picture, this whole national infrastructure project, which is the Bharatmala, that by itself is around 60 to 70 billion US dollars. So over the next 4 or 5 years. So that's the whole plan to kind of raise capital to be deployed across projects. So that's one aspect. The second piece, which relates to foreign investors, the super funds, which you alluded to. So if you look at Australian Super, for example, which is one of the biggest investors in NIIF, which is a quasi sovereign fund in India, which invests in infra. So that's just a perfect example. I think the Australian super funds, basis my discussions with them, so they are looking at investing beyond listed securities now. And these particular changes in the infra space will give them an opportunity after appropriate diligence, of course, to participate in select projects, whether it is transmission projects, whether it is telecom assets, whether it is highways, roads. I think the whole pool of assets where they can deploy money will go up significantly, and it will give them much better choice beyond what is available on the listed space.
Thank you, Amit. I'll probably have switched to one of the questions from the audience online. Just again around the Atmanirbhar Bharat, and maybe I'll get Dharav for you to take this question, because there's obviously sometimes a misconception as well. Whenever, obviously, most of the countries with COVID have gone for self-reliance and stuff. So the whole Atmanirbhar concept, is it to alienate, the international involvement? So I think what the question is, how will foreign trade and investment be affected given the emphasis on Atmanirbhar Bharat initiative, especially they've also touched on mining equipment and services sector. This is a question from Ramya Mohankrishnan online.
Okay, so Atmanirbhar means self-reliance for people who don't know. So to me, having manufacturing outside of your home country doesn't mean that you are losing out on stuff. As Amit mentioned, the Apples have started manufacturing their phones in India, I think. To me, what I've seen practically happening is companies, we have clients in Australia who were relying on one supplier initially, and post-COVID, they are reassessing their supply chain to see if the supply chain is resilient or not, and if COVID were to happen again, their business should not go belly up. So the question is, so they are reassessing, the products that they buy from, and again, they are reassessing whether they want to manufacture in Australia or they want to use countries like India. So one of my clients is doing a feasibility study to see whether the manufacturing in India is feasible or not, given the tax rate. Tax rates for manufacturing is quite low, and I feel it's quite lucrative as well. So again, it is not to stop any any trade or international transactions, but it is to facilitate self-reliance, but more away from dependency on one country to facilitate countries like India to use the skill and labor power that India has to offer.
Great, thank you, Dharav. I think that's obviously a clear misconception. We want to, clarify that Atmanirbhar is not to eliminate foreign investment or foreign trade. It's clearly to work collaboratively with top best practice foreign investment and JV or technology or patented licensed technology, so that we can obviously scale and produce or manufacture at that global scale, and then manufacture and produce for the world as well. So definitely Atmanirbhar Bharat is to again strengthen the capability that India has to offer, but it's for the entire globe as well. So
that's correct. So I would like to share one more example. So we had a client who had IP in developing some sort of equipment. They were currently serving Australian market, but now with manufacturing and stuff, they can manufacture stuff in India. They can tap into Indian market, which is huge. And it is like a win-win situation where they can tap into Indian market, use the skills to manufacture the products and supply the products globally, and again in a cost-effective manner. So which is really, really, really positive.
Yeah, if I can come in now.
Yeah, please, Amit.
Yeah, just on that point itself, just to make it clear that this whole Atmanirbhar project is in no way stating that it is India only. In fact, if you look at the eligibility criteria, all they are saying, even foreign players are allowed. The only condition should be that they should have a company in India. So the example which I spoke about, the 3 contract manufacturers of Apple, all these are companies or groups from Taiwan and so on. So these are foreign groups having a company in India, and they are eligible to participate in this particular program. Yeah.
Okay, thanks, Amit, for again reinforcing that point there. Just coming back to something very close to Indian diaspora and non-resident Indians, I guess. Non-resident Indians always are inclined to invest in some way or the others. Can you please elaborate what are the announcements for the NRIs or the non-resident Indians in the diaspora to look forward from this budget?
NRI has been given lots of empathy all the time. This time the government has made it very, very, very clear that if you are having any hardship about double taxation or any taxation, to rest assured the double taxation, the regime will not come to you. You will be exposed to only one tax. So that's one thing is very, very clear. Second thing is that as I mentioned that NRI would if you want to set up one small company, then you don't require a director because you don't want to run through all the process. The government says that you come with an OPCA structure, and then OPCA structure, and the government is also not saying that if your OPC has become a 100 crore company or 200 crore company, then again you have to convert into the private limited or public limited. The government says no. It is your willingness. You want to run this 100 crore company your solo, or you want to come on the directorship. It is your willingness. There lots of flexibility has been given to the NRI that taxation has been one area where the struggle with tax and going to export. Second one is that I don't want to come to a level where I can manage from the remotely, because as you know that I can manage remotely. Why should I come over there and have the structure of the company ownership or board ownership? So they don't want to go to the board, and then you can run. So, and then again, residency status has also been clarified now. If you are 120 days, then again you become an OPC structure. So there are something which has been clarified. But tax one thing and OPC structure one thing. I think there's 2 areas I believe that it will promptly come in the budget for the NRI.
Okay. Thank you, Andrew. Again, obviously there's been a lot of startup focus. In fact, Indian startup ecosystem has evolved to be the top 3, and hopefully in the next 3 to 5 years, maybe the top in the world. And obviously, always there's been a focused infusion of policies and support, including funding as well. But this budget definitely has given a lot of trust, and again to drive and accelerate that startup ecosystem. As someone who's co-part of the fintech financial services and startup ecosystem here in Australia, what are the key takeaways you see an opportunity, especially in fintech and financial services, that you see as some game changers here?
Sure, thank you for that. I think there's two initiatives that jump out at me. First of all, is the support of the journey that India's been on around the adoption of digital payments. And clearly that's a multi-year journey. And the great thing is that with digital payments deliver immediate benefit. So ease of business from a business perspective. It helps also to address elements of financial inclusion if it's done correctly. But also the great thing is that as digital payments reach deeper into society and become more a way of life, it opens the door then to other areas of opportunity. It underpins things like, if you look in Australia, the government's now starting to push e-invoicing programs, which is all about small business being paid faster. It also opens up areas around understanding and collecting payroll data. Like in Australia now, we have the one-touch payroll system, which particularly then supports things like superannuation. And during COVID, it actually helped to unlock and certain government programs that they wanted to bring into the market. So payments, I think, is a fascinating one. It's good to see that as being a major program there. And even in Australia, if we look at, now there's a lot of UK fintech starting to come to Australia on the back of things like open banking as well. And so to me, digital payments is a building block for that to happen. So yes, I know there's a lot of vibrant fintech activity already in India, a lot of homegrown payment capabilities, but equally, I think, on the international stage, it does open the door on that front. The second area that caught my eye in the budget was around the piece on foreign direct investment for the insurance sector. My understanding in India is that the availability and use of insurance isn't as widespread as, say, places like Australia, particularly from a business perspective. But I know, of course, in the startup world, insurance and risk management is very important, particularly around things like cybersecurity, protection of data. More and more investors are expecting startups to have the right insurance protection in place, and it brings some degree of confidence in the market and for consumers who are using these services. And so, Australia has quite a vibrant and well-developed insurtech ecosystem. There is an insurtech association here in Australia. So maybe, the opening up of the insurance market and the attraction of more foreign investment will bring with that opportunities then for perhaps disruption, for, I guess, insurance to reach deeper into the economy and into society and deliver that element of trust and dependability and reliability that comes with that. So they're probably the two standout ones.
And there's also been focus on a lot of single-person company.
Yes, that's right. The one-person company announcement I also read. That's the great thing about that, of course, as we see in Australia and elsewhere, micro businesses, freelancers, sole traders are really, the very foundation elements of entrepreneurism and startups. So the more that is supported and facilitated, that's a great thing as well. Definitely.
Thank you, Andrew. I'll just switch to one of the questions from the audience online. Question from Amit Mehta in Brisbane, and probably for you to take, and then maybe we'll get Amit to chime in as well. A number of commentators have mentioned that GST reform needs to be done. Tax takings are important for expenditure. Please, can you shed light on the status and how dependent are GST takings for the government plans? So obviously, India went through a major GST transformation. Has that been bedded down, or there needs to be more kind of tweaking required there? What's your thoughts?
The GST is definitely a complex subject where the GST, India has come to a long way and it's come to a GST. And I believe that what the experts say that India has come up pretty well in the GST reform system. The two broad line, if I would like to say that GST, it has stabilized, and the government is continuously inviting knowledge and how they can designate the GST towards the activity. I was hearing one of the micro entrepreneur. He was saying that he's in manpower planning, and he is saying that I mark up only 2% of revenue to the client, whereas I have to pay 18% GST to the government. So this was one of the aberration. I believe that these things are there, and government is totally aware of. So government is fine-tuning all those aspects one by one, and I believe that a time will come, which will come very, very soon, but the GST definitely will get a stabilized.
Thank you, Pranay, for that. Amit, if you want to chime in and your thoughts on GST reforms.
Yeah, so GST, I agree. I mean, so we have come a long way, no doubt about that. But yeah, I mean, even today, I mean, from certain quarters, you get the feedback that it is quite cumbersome, tedious, so something needs to be done about it. But the thing is, if you look at the overall picture, what is the government trying to do? They want to increase the tax base because there's a belief not everyone is diligently following the rules. So this whole focus on using technology, going digital, making compulsory this whole e-invoicing, the whole idea is to bring in more people in the more companies in the tax net. Yes, it is creating issues to begin with, but I think overall, this is something which will keep India in good stead.
Great, thank you, Amit. We might come to the floor if there is one or two questions before we, wrap up the session. But I'll just continue again with you, Pranay. I think there's a lot to talk. One of the things, obviously, COVID did impact India's growth, the whole momentum we had, and globally it's impacted. Now, what the post-COVID era, India's going through the hockey stick, the trajectory of the growth. But we still have a 9.5% deficit. So we need to be tracking it, surely double-digit growth. So how do you think that's going to happen? And what are some of the key sectors? When I recollect last time when you spoke a few years back, you spoke about aviation sector being, double-digit growth. So what are those core sectors that you see which is going to deliver, the double-digit, GDP growth as well as, clear this deficit as well?
The deficit management, the government has come out very, very well, and government has three plans. One plan is that the deficit management. They said that government said that I'm going to manage the deficit in three ways. One way is that internal borrowing, and you said that internal borrowing and external borrowing. The one part is the borrowing, the second part is the divestment. So these are two broad lines. They have said that, and I'll tell you that. For the borrowing part, if I go to the detail into the numbers, the government said that during 2022, their borrowing will be, net borrowing will be 9.5 crore. If you look at this year number also, then the net borrowing is on the same line. So net borrowing from the 21 to 22 will remain the same. And this pandemic, when the government has achieved this borrowing of 9.5 crore, we can assume that next year also the government will do the 9.5 crore. Borrowing at the same time. But if you look at slightly more into detail, then you can see that the day when the government announced that I'm going to borrow 12 lakh crore, right? Then bond prices has gone up. The market is indicating that now the market is aware of that this year you did some certain amount of surprise, you borrowed on transit, but now you are saying that I'm going to borrow at the day one, you are saying I'm going to borrow 12 lakh crore. So there will be some pressure on the bond yield. And the government has to pay a premium on that. But hopefully that they will be able to come out. Second one is the divestment. They said I am going to mobilize 175 lakh crore, 1,75,000 crore. As Amit also said that the mega IPO is coming for the LIC, and the government has created dashboard, the pipeline for the divestment. The government has given a railway to identify the land which are the surplus which can be monetized. The good company like Bharat Petroleum, Air India, Neelanchal Ispat, this company where the government has said that going to divest. And this time that government is very, very particular, and I believe that on the documentary that Niti Aayog is already working on the next list. If this list is get exhausted in next 12 months time. So there's a two aspects. One is that the borrowing, the normal borrowing program, and second one, the divestment will be the two areas where the government will going to mobilize this deficit. Government has totally indicated that as per the budget estimate of FY21, where the receipt number, I think the last time they projected for 21 lakh rupees total revenue receipt, but this year projecting only 70 lakh revenue receipt. The government has admitted and my revenue collection will be lower than what we expected in 21. So net, I think that is within manageable, and hopefully we will able to see some saving in this borrowing aspect.
Thank you, Pranay. Over to you, Dharav, just probably adding on to that as we take off on a different new trajectory. Have you seen the wide change in the Australian market and some of your clients in terms of the perception they have about India, either as a manufacturing partner or a JV partner, or a large market for distribution, and what's the vibe that you're getting from your clients?
As I said, I'm getting very positive vibes in terms of seeing India as one of the manufacturing hubs. They are exploring the opportunities out there, trying to see, be it collaboration, be it setting up the plant or having a contract manufacturer, manufacturing for the Australian entities here. That is definitely something on cards. It might not be, they might not 100% transfer from existing supplier to another supplier, but at least they are considering now. And as compared to maybe a few years back, that they were thinking like there is a risk of a single supplier, but this year they are implementing those steps to identify the markets where they can source the products from. As Pranay mentioned about the textile, is definitely something that we should reach out to our clients and see if they are interested. Yeah, so that could be one of the other sectors as well.
To my surprise, last week I had one meeting where one company, one Korean company who is based out of New South Wales, they are setting up ethanol plant in Australia. They came to me for the knowledge and for discussion. I said, why you choosing SBI for your knowledge or something like that? Then initially they were quite hesitant, but later on they said that my investor is from Pune based India. So they are supplying not only equipment, but they are supplying equity also. So the way we change it, the Indians are not only investing the money, but also into the equipment. But still, I was surprised. Why this so? In India, we all know that ethanol is made out of sugarcane. But to my surprise, in New South Wales, they want to manufacture ethanol out of the wheat. So the technology and something is changing. So there's one aspect. Second aspect is that there's one company based out again out of New South Wales. They're acquiring one company in India. So there is a certain amount of hesitation. They want to acquire company in India, but they said, I don't want to move my capital from Australia to India. I said, why? Again, the answer was, I don't know my investment will get protected or not. So this budget and last year budget also, that government said that I'm going to introduce investor charter. So where if you are investing in India, so the government is coming on some code where you're in, there's some provision will come from the government side so that your investment is get protected. Of course, we have find a solution for that. That if you want to invest in India and if still you don't want to move the capital, so that you give me capital over here, will issue some instrument. And that's beautiful having the Indian bank over here. Like two ways. Suppose you want to invest, any corporate want to invest back in India, but they don't want to move the capital, give the capital over here to us, and we will issue a financial instrument back to India, and again that financial instrument, that equity will get into. So the other way around, if somebody from India want to invest in Australia and they don't want to move the capital, you can we can play a bridge. So I think that's the right time when we can see that some traction is happening, and hopefully that with the involvement of everyone, this traction will go on.
Thank you. I think we're coming to the last part of this panel discussion. I just want to touch on one of the sector which India has gone through a major transformation and made it clear this is going to be the future direction, that's education policy, which was obviously a few months earlier that it was very impactful to see the change in direction and preparing for the future. And all of us who've come through that fabric of your K-12 and your engineering and stuff, that's completely been disrupted. It's all more skill-based. What is the emerging tech, and focus on that. That also presents opportunity. And in fact, I was yesterday in a conversation with one of the Indian startups supporting an Australian university to, onboard some of the Indian students to deliver the programs in India. So obviously that's one sector which is seen sweeping changes, and there's also this budget is really portrayed a lot of significance there. What is your take on, how the educational, sector is going to be impacted by this budget, and the future for Australian universities to collaborate as well?
As I said, education sector is definitely something that's promising to me, and I feel that universities from Australia can, probably collaborate with startups in India to deliver the education to the students in India. That way, Australian universities can tap into their IP, and Indian students can get the benefit of the IP that Australia has. So, again, because of COVID, it has become like all of it has become digitalized, and it has become like even right now, I feel that all of the education, all of the schooling is online. Like the students are not going in the classrooms attending those classes. It is all online. Again, with universities, they can tap into masters and deliver the quality, the good education back to students in India. And so definitely something to look.
Thank you, Dharav. Amit, you want to chime in for the education sector, how this budget is really giving that thrust for the future new India?
Yeah, so of course, over and above what was mentioned on the collaboration between Australian universities and Indian universities, I think the other piece is what is the kind of play for the investors because of this whole focus on digital. So if you look at Byju's, for example, which has become the #1 education tech company in the world, that's because of the sheer size of the Indian market, right? I mean, out of nowhere in the last 1 year, it has got so much investments from offshore investors. And I think that's the nature of the game, looking at COVID and where we are. Probably this hybrid model is going to continue for some time, and which will make all these companies very attractive, and make it very attractive for foreign investors also to participate in these companies and the growth story, which should happen in this space. Yeah.
There's a lot for Australian investors and education institutions to look for that opportunity with India. Thank you, Amit. And Andrew, finally, on this again on the startup front, I think India presents a great market for Australian startups to essentially look at as a soft landing pad or country as a market to then scale and service not only rest of Asia, but Africa and MENA and all. So what is your thoughts in terms of the startups and more specifically fintech companies, the opportunity there?
Yeah, that's a very good point, because I think there's a lot of naivety for Australian startups around India and the potential that represents. I think India is often overlooked. And so there's significant potential in terms of the size of the economy. Clearly, some of the initiatives we've talked about today, and also to your point, India does represent a stepping stone into other parts of the world. I do a lot of work in Africa with the World Bank, and I already see a strong presence of Indian businesses and entrepreneurs in those markets. I think there's, at the grassroots level, there's a lot of similarity between certain aspects of Africa and India in terms of distribution of population and lack of established infrastructure and things like that. So I think, there's a greater role to play for India and by India and people here to raise that awareness and that profile and to create those pathways for Australian businesses to do more in that market.
Thank you, Andrew, for that. I think there's a lot more to be done to facilitate, especially some of the awareness piece that maybe Amit, you can also touch on, is that there are a lot of Indian investors also looking to invest in Australian startup ecosystem, not only from an equity perspective, being part of a global, growth story, but also to then take that IP or, have curate joint ventures in India to service Indian market as well. Amit, do you want to touch further on the opportunities for the startups there? I think there's a couple of questions that have come up in terms of investment raise opportunities into Australia as well as vice versa.
Yeah, so if you're looking at investments offshore at the individual level, the regulations allow you to invest up to $250,000. So that's allowed at an individual level. Beyond that, see, there's a lot to collaborate, right? If you look at the Indian market, for example, it has matured so much in the last couple of years, especially because of the RBI regulations around payments, around payment aggregators, around bill payments, and all that. And obviously, because of the sheer nature of the product, it requires collaboration, it requires knowledge sharing. And I think that's where the opportunity lies between Australian companies and Indian companies to share knowledge, to share best practices, invest in companies in the other jurisdiction, and help them scale up the model and achieve the growth which they are aspiring for. So yeah, I think a fair amount of scope in the particular corridor.
Thank you, Amit, and we look forward to, again, with the help of AIBC as well as the Consulate General offices here, we look forward to really facilitating those market access opportunities and awareness, as Andrew mentioned as well, in the forthcoming months. Thank you again, and it's been a wonderful panel session we've had. Great to have enlightened the audience as well as the people who joined online. Thank you for sharing those insights as well, and I look forward to working with you along with the CGI Sydney office as well as AIBC to shape the next course towards the $1 trillion economy, $5 trillion economy that we are all aspiring for the new India. And thank you again for all your role as well. Thank you. Thanks. Thanks.
Thank you.
If I may just, yeah, probably running short of time. If I may invite Samir Arora, the president of AIBC New South Wales, to address and do the vote of thanks. Thank you.
Thanks, thank you. Good evening, everyone. Good evening, ladies and gentlemen. I would like to start by paying my respects to the traditional owners of the land. There's a good and a bad to do a vote of thanks. The good is you don't need to do any homework. And the bad is if you do your homework, it's of no use because we've heard from the experts. So I won't go into the budget specifics. We have heard from the experts tonight. But I would like to say that as AIBC, we are geared up for all the sectors that we spoke about and heard about tonight. Let it be Make in India manufacturing, we have a Make in India chapter. Talk about startups having a tax exemption for 3 years. Irfan runs a very successful startup chapter. Pranay, you run a financial services chapter. We have an agribusiness chapter. So as AIBC, we have a lot of opportunity to bring the two countries, to bring the two economies together, but it also comes up with a lot of responsibility for us. I would like to thank Mr. Manish Gupta and the consulate for hosting us here. Thank you, sir. I would like to thank all the panelists, speakers, Pranay, who is obviously from our gold sponsor. You're a key member. You're also the head of our financial services. Dharav from Grant Thornton, he's a new induct to the management committee. So welcome, Dharav. Andrew, thank you so much. And Amit, thank you so much for joining us all the way from India. You pretty much summarized the budget for us in a layman's language. So I think I can claim to be somewhat of an expert when I speak to someone.
Thank you so much.
No, thank you. And thank you, Irfan, for pulling this all together at a very short notice. Thank you to our team, which has made it all possible. Wendy, Sam, Vishal, for all the logistics, everything that we had to do. So once again, thank you. Enjoy your evening. Enjoy the networking. Stay safe, stay healthy. Thank you.
We do have over the next few weeks, quite a few other events coming up as part of AIBC across other sectors. You can see on the screen some of the national events coming up. The agri sector, an amazing event coming up, in fact, later this week, shaping the future of agri there. And also, there's another event later in March in the infrastructure sector focused on, and I think Anand is going to be facilitating that as well. And on the 11th of March, we've got the infrastructure sector focused event as well. So please stay tuned on the AIBC website or our social media channels as well as we bring to you more of these focused events. And we look forward to more of hybrid events and again, engaging you all as well. Thank you on that note. Stay tuned for more. Stay safe. Thank you.